Hi everyone, I am Dr. Soundararaj. I am very happy to interact with you all through this video. In this video, I am going to give my lecture on the topic Factors Affecting or Influencing Capital Investment Decisions. These are all a couple of details related to my career. After you watch the full video, if you find the video beneficial to you, give a like to the video and do subscribe my channel so that you will get the notifications of my future videos. Let's look into the concept. The factors affecting capital investment decisions. Number one, urgency. Sometimes an investment is to be made by an organization due to an urgency for the survival or to avoid heavy losses. Example, during breakdown of a machinery or fire occurred in the plant or any other accident that is taken place. So definitely there arise an urgency for a concern to replace the existing plant or to replace the plant which is spoiled or a machinery which is damaged and so on. So this speaks about urgency as a factor which comes to influence capital investment decision. Number two, intangible factors. We find investments are done by business enterprises. It's because of the intangible factors such as the safety of the employees, welfare of the employees, or status or prestige for the business concerned to take up a project, or keeping in mind the social welfare of the people in the neighborhood, or for the goodwill of the firm, the capital investment decisions are taken. So therefore, I would firmly say intangible factors could also be a great influence in the capital investment decision of a business concern. The third one is about legal factors. An investment which is required by the provisions of law is solely influenced by this factor. And although the project may not be profitable, but the investment has to be made. It's due to the necessity or compulsion that arise from the legal environment of a business concern. The fourth one is about availability of funds. Investing on one or more projects, irrespective of the fact that they are more profitable, a business concern may not be in a situation to do investment in all profitable projects that are available in front of it. The reason availability of funds could be inadequate. Making use of the scarce financial resource, the concern may even forego to choose a few profitable projects that are available in front of the concern. It can go for choosing one or two, leaving away the rest. It's due to inadequacy of the funds required. And the fifth point of influence on capital investment decision is future earnings. If management of a concern has plans for undertaking more profitable projects in the future, keeping that in mind, it can opt for a few projects to be done at present, though they are less profitable, looking for the shorter payback period. Such projects could be done during the time available before taking up the larger projects which are more and more profitable, that will guarantee the future profitability of the organization. And that's what about the idea behind the fifth point. Risk and uncertainty. Obviously, capital investment decisions are greatly influenced by the risk and uncertainty associated with the project alternatives available in front of a business. The expected return from a project should be really matching with the amount of risk the business should undergo taking up the project. And the risk is basically measured based on the uncertainty that with which the project is related. If the uncertainty is very high, I am sure the amount of risk involved in taking up the project will also be very high. Obviously, the business will tend to expect higher rate of return from the project. If the project is not able to give such higher rate of return which will equate the amount of risk the concern should undergo, the project will be dropped. If the project promises such huge returns which will equate the amount of the risk the business should undergo in a project, the project can be very well accepted by the business. This is about the sixth point. And the seventh point is about obsolescence. The risk of obsolescence is another important factor to be considered rather than profitability, which affects the managerial decisions in respect of investment proposals. Yes, it's nothing but a situation where we find 3 projects available in front of a concern. Among the 3 projects, project 1 looks more profitable, but there is every possibility for the project to get outdated in another 1 year time. Whereas if the concern looks at the second and third projects, among the 2, the second and third one looks more profitable, but the profit at a higher level could be expected only after 2 years time. And the lifespan of the project will also be extended for more than 6 years, or it will go up to 7 years. And the best advice to the management in this perspective is to ignore the first project, which is more profitable than other 2 projects. Why? It's because the project is going to be outdated in 1 year time. If the concern goes for the third proposal, which is comparatively less profitable than the first one, but more profitable than the second one, it will ensure the future return or future profitability of the concern, and it could be extended for a period of 6 to 7 years till the project comes to the end of its lifetime. And that's what about the point we need to understand from the 7th aspect. And the 8th point of consideration here is cost considerations. Cost of capital of the project, cost of working capital, opportunity cost of capital, etc. or other considerations involved in the capital budgeting decisions. See, this is about the cost of the investment to be done on a project. Every penny a concern has got is mobilized either from shareholders or owners or from creditors. Therefore, the concern is liable to pay a kind of return to the shareholders or creditors from whom the money is mobilized, and that is what named to be cost of capital mobilized. Therefore, while doing investment on a capital project, every business concern should give due importance for the cost of capital involved on such capital investment proposals. Thanks for watching this video. I hope I have done my explanation up to your level of satisfaction. I'll meet you in another video. Bye for now, everyone.